Hello traders, welcome back to yet another video, and this is going to be a video yet again on the volume profile. Now, the whole difference about this video based on the other videos that we've done, how to correctly use the volume profile to identify not only areas to trade, the directionality that you could possibly find in the markets, and how to use the volume profile to manage risk and look for those trades in those specific trading zones. Before we get started, smash that like button, hit that subscribe button, and let's go at it right after this intro. Now, throughout this video, we're going to be using the following software, Sierra Charts and TradingView. We're also going to be focused on the S&P 500 futures, right, the E-minis. So that's going to be the main product that we do trade here at TradePro Academy and the main thing that you're going to see on this channel. The main concept of the volume profile is identifying distribution blocks. And with those distribution blocks, we can find areas to trade. So if you watch our price action video, this builds on the price action concept of finding areas to trade and differentiating between right areas and wrong areas. So understanding the directionality and the levels to trade is going to be the main purpose of the volume profile, right? We have the point of control, which is the POC. We have the value area, which is 70% of the value traded within each session or within multiple combined sessions. We have the value area high and low, which are two areas that sandwich the value area. We also have low volume nodes and high volume nodes, right? And finally, we have ledges, right? Which are sandwiching the distribution blocks. Now, the point of control is going to be the area at which the most volume in an individual session or combined multiple sessions is traded. This area, I should warn people, is a huge gravitational pull towards it, right? Volume, it's a huge area of volume and price is attracted to volume. So I prefer to use this POC as a target area rather than looking to open new trades within that area. Whether it is a POC from the subsequent session or the current session that's shaping up, or the cumulative 5, 10, 20, 30, 100, whatever type profile you have. Now, the point of control is an area where might not be traded sometimes, right? It's traded once and then it's not traded in another session, which is what we call a naked point of control. These are huge target areas and can be massive inflection points. The value area. The value area is the majority of the volume that is traded either in an individual session or a cumulative amount of sessions. The value area is usually defined as the first standard deviation or 70% of the volume traded in that current block, whatever time frame you're looking at. Now, this is an area that we do call balance. Price would like to remain within said balance and would reject each ledge of that balance as long as we're within it, which happen to be the value area high and the value area low. When price escapes this balance, which is the value area, you will cross through the value area high or the value area low, upside or downside, in which price becomes imbalanced and would target subsequent balance areas or, like we talked about, naked points of control. We also have low volume and high volume nodes. These are areas where you have a large extension of volume on the profile, which is a high volume node. Remember, higher volume will attract prices. Prices want to sustain those areas. And then low volume nodes, which are very small, thin areas on the volume profile, which usually get pushed through very easily and accepted through very easily. Now, the thing with high volume nodes is that a cluster of high volume nodes that is sandwiched by low volume nodes on either end is what would create a distribution block, right? That distribution block is going to be a main premise in how we identify levels to trade, distributions, and directionality throughout this video. So when we have a distribution block, the ledges on either side of that distribution block are going to be seen as areas to trade key support resistances. So if the imagery on the screen wasn't enough through this quick little intro, we are going to look at a chart and break down these specific criteria before we dive into distributions, directionality, and finally, the plan to create on a daily basis with targets, anticipated moves, and more. So let's dive right into that. All right. Hello, everyone. We are now at the computer here, and we're going to be going through a lot of the volume profile stuff that we had talked about in the first portion of this video. And what we're going to be doing is breaking everything down kind of step by step here so you guys understand a little more as to what we were talking about. And with that, remember, we're going to be going through the steps of the volume profile, right? The components of that volume profile. We're also going to be looking at distributions and how the directionality works with those distributions. And finally, I'm going to be piecing this all together to create a trading plan along with a little strategy that I think you guys might have seen before, but it's worth taking a look at again, especially with the volume profile and how that would work in terms of directionality. Now, before we get started, I do want to tell you guys that we are going to be using the ES futures, the S&P 500E mini, ESE mini futures, right? These are the S&P 500 futures, and they're pretty much the most commonly traded equity futures that we have. Each 1 point equals 4 ticks, which equals a $50 move up or down in your account balance, meaning each tick is worth $12.50. So with that, you also have the micros. I do prefer to use the minis because they have more volume. They are the older product coming out in the 90s. And you can use the micros, right? The S&P 500 micros, right? They're MES. And what they are is 1/10 of the notional value of the ES, meaning 1 point on the ES, we told you that is about $50 not about, but exactly $50 a contract for 1 point, and 1 point on the MES, right, is equivalent to a $5 move per contract. So with that being cleared, we're going to be using Sierra chart here. These two screens are Sierra charts. This is a 10-tick chart, right? A 10-tick range chart. And you can see that there is a volume profile on this. This has multiple volume profiles. This is a 5-minute chart with just a common volume profile that divides each session based on the overnight, which is a longer period of time, as well as the regular trading hours or the US Open. And then we have this larger cumulative volume profile, which I believe is a 65-day cumulative profile. You can use anything above 20 realistically. We're also going to be looking at, let me just show you somewhere here. This is the TradingView futures chart on a continuous contract. We are now trading the Z contract, which is December, and we're going to be using this with a cumulative. The focus is going to be the cumulative volume profile, which on TradingView is called the visible range. And this is the larger profile that you see here, which whatever you see on the screen, right? If I zoom out, the profile will adjust to the data that has now been shown. So these three main charts are what we are going to focus on when we talk about the volume profile and how to use it effectively and correctly. So we talked about a multitude of different things here on the other screen where I was talking, but right now with the volume profile, I just want to go over through some of the areas again, right? Each session that we have divided here, and naturally the cumulative session, have a point of control, which is denoted by this yellow line. Remember, the point of control is going to be the area at which you have the most volume traded on that session, becoming a big magnet. You can see how price oscillates in and around that. This is exactly why I don't like initiating trades at that point of control, because you can see even on this individual session, there is a lot of oscillation that doesn't necessarily hold it as a key support resistance. You can see you push through it 5-10 points each time, right? There's a lot of oscillation around it. Now, on the other hand, it can be used as a magnet for price pulling into it, right? We also have areas that are extended points of control. You can see this yellow line right here, and this is what we would call a naked point of control. This is a point of control on a session, right, that had been traded and created throughout that session, but not traded again. These become interesting areas for us to target, right, on the downside should we get into those distribution blocks. And often, if they're very, very defined naked points of control, they present us with a rejection opportunity. So this is going to be a downside target if price does directionally push to that area, and we'll talk about how that may happen as well. Now, there's other parts of this volume profile you can see right here, just focused on the individual session. You have a blue area, right? And it's sandwiched between these two blue lines. The blue areas are value area, right? The blue lines are going to be the value area high and low, which are very important, especially if you're trading the regular trading session, right? To look at those blue areas from the overnight session, right? They present themselves as support resistance areas and also help us with the direction of that regular trading hour session, right? Now, we also have the low volume nodes and high volume nodes. You can see them both on a larger chart, right, or an individual session themselves. The low volume nodes, you can see there are these larger divots, right? There are these drop-offs in volume. The high volume nodes are the larger block areas, right, becoming points of attraction. When you accumulate a lot of high volume nodes together, this is what presents itself as a distribution area. If we take a look at TradingView, they're very, very exaggerated here, right? If we look at this cumulative session, you can see where the divots are, where the distribution blocks are. And the distribution is simply an area that combines a lot of those high volume nodes that creates what looks like a belly. Now, in these areas, you can also find that these distributions are going to be sandwiched by what we call ledges. And I like to define a ledge or a volume profile shelf simply as an area where a high volume node drops off really aggressively into a low volume node. Now, what I've done is this section right here that's in green, right? This box is a prior distribution. You can see right here, it's a very, very thick distribution that does stick out, but it's a prior distribution that is held time and time again. Now, when price moves into these distributions, the thought process is we enter and the next move is going to be to the other end of that distribution. These distributions are what we do call balance in the market. When price is outside of balance, right, this is an imbalanced territory. So when price, you can see there was a larger distribution somewhere here. We can just shade this in. When price escapes that distribution, you can see that there's a very low area of volume that sticks out here. And this is what we would call imbalance, right? Price is imbalance when we're in this low volume area. Now, as you can see, when we're in an imbalanced territory, what price does is moves quickly through that area and attracts into the next distribution block. So from this, we start opening up the idea of directionality, right? Direction in the market. What I mean by that is price tends to gravitate from distribution block to distribution block. If we outline this as a distribution, this is a distribution, and this is a distribution, price will like to move from one of these distributions into the other as long as there is low volume area that is in between these larger distribution blocks. Price wants to hold in larger volume areas. It wants to keep in a balance like that. When we enter a distribution block, we want to move to the other side of that distribution block. When we are within a balance or a large distribution block, well, what happens with price generally is that it wants to stay in that area and looks to reject either end of that distribution block, right? Or the ledges that really entrap said distribution block. So that is where we build upon the directionality of this market. If we zoom into this, for example, right, and we can outline a few different distribution blocks here, right? We can say that this is a decent distribution like this, right? We can say we've got another one over here. We have one that sticks out like this. We have a very defined one right here currently, right? And what happens with this price when we talk about directionality, when price is within a distribution block, right? Like even the one down here, why don't we label these, right? From 1, 2, 3, and 4. When price is within a distribution block, right? We sit in 3 right here. The thought process, how price should technically work based on volume and distribution theory, is that price wants to stay within this distribution block area, correct? When we stay within this distribution block area, the tops of the distribution balance and the bottoms are going to be main support and resistance. Price wants to maintain these areas. Now, eventually, price can escape out of it and it becomes imbalanced. And what happens then is that price starts to move into the next distribution block. That is going to be the point of attraction. So when we talk about directionality, there's 3 main things to look for when we're talking about distribution blocks. Number 1, can we sustain within the balance, right? If that's the case and we are in a balance, we can expect the top and the bottom of the distribution block to act as a gatekeeper for price to maintain price within. Number 2, right? There's 2 portions of imbalance. Can we move outside, right? Outside of the balance to the upside? And if we do, we become imbalanced and the directionality is going to be bullish. And we're expecting the top of that prior balance in this scenario somewhere around here to hold as our key support. If we go outside to the downside, it's going to be the same scenario where we're expecting the ledge that held the prior balance to hold as resistance. Fairly simple in that regard when we talk about directionality, right? So the idea is, can we accept into the new distribution block by a certain amount of points, right? It's not enough to go 2-3 points to the upside, right? I want to see a move that is 7 to 10 points through that balance if we're going to enter into a balance, right? Can we do something like that for price to actually accept? And then you're looking for price to actually hold out in these areas to remain consistent. Now, if we use the larger distribution blocks, if we pull them from trading view here, we can see that the main distribution block does start somewhere around 41.05, right? This is the last distribution block to the upside. We had some key support resistances, right, that you can draw out. And we had the prior distribution that kind of ended in and around that 4100. We can call it 4190, right, in the 4190s. So we'll say that this was the prior large distribution block, correct? And then we can use just a slightly different color and say this somewhere here is the entrance of the new distribution block. And the top end of that distribution block is around 4160 to 65, right? But obviously there are levels in between, and we'll get to those levels, right? We talked about price action in a prior video, but now we're going to use volume profile to identify these levels after we understand this directionality a little more. So the idea here, yes, there can be different distributions within the larger distribution. Obviously, there's going to be a main support in and around that 80, 82, right? You can see this little distribution block here surrounded by these ledges. But the point is, once we exit, right, the top end of this distribution, we can call it somewhere between like 92 and 95, right? It could be a little higher here somewhere. The idea is, can we enter into the next distribution block above, which we do, right? From 41.05, we accept into 41.13-ish, right? Does this qualify a nearly 10-point move? Correct, right? So we've accepted into that distribution. That doesn't mean that we have to hold the bottom end of this distribution. That is the only long that we could possibly look for. That's incorrect, right? We can look for that naturally, and we do hold it fairly well a few times, but we can also look for the prior balance top to hold out for us to either remain imbalanced and go and attempt this distribution block again, or just hold out a key ledge of support. And eventually, right, we get that larger extended move. We hold out into the 05 region, not once, but twice, to continue to accept into this distribution, which keeps us on the bull side, right? Bullish all day. Yes, you can look for fades, but these key areas are going to be higher probability longs for that upside swing. Now, when we talk about these distributions and all these levels, you might be wondering, okay, well, that's great. I understand these distributions, but where do I get these levels from? Now, the levels based on these distributions can be found by identifying where key ledges are. Where does volume drop off from high volume node to low volume node, right, and create that massive divot? That is where you're going to be looking for support resistance areas. Remember, we talked about price action where we found points of inflection. Now, these points of inflection based on the volume profile are volume based, right? So no matter if you draw them from price action, right, or the volume profile, they're going to be very similar. However, with the volume profile, you're going to find key areas rather than having every single point based on price action. So if we zoom out here even a little more, it's a very messy chart because I do use a lot of these levels. But if you take a look at like a 4-hour chart, for example, you can see where a lot of these ledges lie. You can see how big this distribution start is in and around that 04, 05 area, right? Massive ledge that drops off here. So it's a huge area. You can see this little divot here at this 40-20, right? All of these ledges that shape up here, there's a ledge here at this 38.95, right? You can see 38.85 as well. But these areas, these support resistances are based on these large ledges on the volume profile. Now, you don't only have to look at a trading view profile. You can look at the Sierra chart profile as well here. You can see where these ledges come into play, and you can draw your key support resistance areas based on those, right? You can even adjust them a little here. If we move this one, right, to encompass this massive ledge, it becomes a much better area, right? And we're looking for these ledges. Now, one of the bad things about Sierra chart is that when you do have a contract rollover, which is a case, you can see that the volume profile is very thin and it readjusts. That's why I do look for either continuous contracts or trading view. Now, when you have these ledges, these very stern ledges that we've drawn here as support resistance areas, right? You can use these to long or short off of those areas, right? You can use these to find areas to play off of. But when you understand the directionality of the actual distribution and how these blocks come together, you have a higher probability in being on the right side of the trend and finding those key support resistance areas. So where these ledges appear, you can have your support resistance areas there, your areas of interest to trade, right? But at the same time, we also have to understand that we have to keep an eye on what the distributions look like and how they give us directionality in this market. So with that, we can go a step further, right? We can devise a daily plan to help us trade in the futures market. When we talk about a daily plan, the way I see it is we have to have support and resistance areas, right? We have to have an area where we are comfortable to be long above and short below, which is generally what a pivot would stand for. And then we also have to have key areas of inflection that kind of give us a target region, right? Which is very similar to the support and resistance area. So when we look at a general chart and we're trying to find what the pivot is, you have to think at what area do the longs lose and the shorts win, and vice versa. When we take a look at this and take this into consideration, what we could do is just find an area that splits up very thick distributions between each other. So for example, today, if we said, okay, well, if we get above the 4105 and we actually hold that 4104 and we actually hold that, it's an evident bull. It's evidently bullish until we get into that 32 region and maybe 41. It's a very, very evident bull because it splits up this distribution block from the low volume that we see to the downside. So very simply right there, what we've done is split up a key distribution from a low volume area. If there's two distribution blocks like this, right, we can say, okay, well, the pivot is somewhere in the middle that really splits up these two bellies, right? Because if we enter below into this distribution block, evidently we're going to be looking for the short that gets us into the bottom end of that distribution. If we move to the upside, we're going to be looking for the long that gets us into the top end of this distribution. That's generally how distributions work. So this area somewhere here would be what we call a pivot, how we can split up these areas. So same thing today. If we have a massive, massive region, 4104 to 4105, right, we can dub that a pivot. Now, there's no right or wrong answer for a pivot, right? You can say a pivot's all the way down here where we have this massive distribution block support that pushed us into the upside, but it makes more sense if we have that 4104 because that is the entrance to the next distribution to the upside that can span all the way up to 4165 generally, where we could see some kind of general rejection, right? That is what we're looking for on this volume profile. Now, with the support resistance areas, it's fairly simple. We just look at ledges that we've created as our support resistance areas, right? And then we can transform these into target regions. If we transform these into target regions, right, the upside target is going to be in and around that like 13. We've got this 20, 18 area, right? And I like to do 2-point zones because it's not always going to be super accurate. And then we have like the low 30s, we have the low 40s, and those are going to be not only upside targets, but also areas of potential resistance for some traders to kind of come out, maybe look for a little fade, maybe look for some sell side. If we look at the support, it's just going to be areas to the downside, which are going to be short targets into the 92, into the 82, so on and so forth, which then become key support areas as well. So with that, what we've created is support resistance areas, targets, and a clean pivot to kind of give us the directionality of that market and of that day. Now, with directionality and this plan, we can go even a step further. We've talked about the overnight trading plan, right? The overnight strategy. The overnight strategy encompasses what had happened in the ETH, the extended trading hours, the Globex session, how this shaped up in terms of the volume profile, how this shaped up in terms of the ledges, right? What had happened. And it's important to note where the value area highs and lows of the overnight session are, right? Where the value area highs and lows, where are the key distribution and inflection points, and where does the price close for the extended trading session, and just like the close, where does the RTH open, right? Where will it open? That's going to be very important. So we have to answer these few questions. So the value area high is right at a key ledge, right? 13, 41.13, massive area. You can see right here, it's an inflection point. The value area low is in and around, right, this 93, let's say, which is another very key inflection point, right? We also have a very key inflection point down here at this 82. But these two areas that we're going to link are going to be very important, because if we move above the value area high, right, inherently bullish. Remember, distribution and directionality. You move below the value area low, inherently bearish. Again, distributions and directionality. Now, another thing, where does the price close from the Globex and where does it open on the regular trading hours? So if we take a look at this, right, let's clear some of this space here. We don't want to be, we want to make some room and understand exactly what we're looking at without too much noise, right? So if we clear some of this and we take a look at where does price open, this is going to be important. Where does price open? Because it gives us a little more hint at the directionality of the volume profile at this market. Because let's just draw this box again, right? And I go like this, very simply put. And we open within the value area of the RTH, meaning that we open within balance. That means that we're going to look to reject the top end and reject the bottom end to sustain the balance. Until we flush back above or below, we don't have that strong of a trend just yet on the regular trading hour session. We do on the grand scheme of things, right? Remember the overall distribution and the directionality that tells us that over here, massive support that wants to hold up to the upside. That's great. But if we're looking at this, we could have little moves that look to hold in the balance, meaning 413, first trade comes in, drops down to 4104. Not only do you have a 10-point move to the downside, but you have the option to buy it in the grand scheme of the direction that the market should be going in for a move back into a 30-point area, right? Positive into the 34s or so plus. Pulls back down, right? This area doesn't hold that well, but what does? 41.05 to 04, again, another strong directional move. So there's multiple ways to play this, and obviously it's not as clean as just looking at the area and being like, oh, okay, I got to short it here. There's more qualifiers that you might want to add into this strategy, just like the order flow or the depth of market, right? Which is another thing that we are going to present and talk about. However, this is the main focus of the volume profile and how we would use it correctly to trade the futures market. We have talked about the components of the volume profile, right? All the components and how they work together. We've talked about directionality with distribution and distribution theory. This is a huge portion of the volume profile. We've also talked about how to create a very simple plan from the volume profile for your day trading. And finally, a very easy directional strategy that encompasses the extended hours trading session from the S&P 500 futures, the overnight session, to identify some key levels and identify some directionality. So those multiple steps should give you a very good idea of how to actually correctly use the volume profile. And if you have more questions about this, do not hesitate to drop a comment down below. So let's see and wrap up this video, and we'll see you guys on the other screen. And I hope you guys have thoroughly enjoyed this portion of the volume profile and futures. So I hope you guys enjoyed that volume profile video, how we identify the correct areas and the correct distribution on the volume profile, how you can use the volume profile to actually give yourself a good area to trade and a fighting chance in the futures market, and how we would like to think correctly using the volume profile in the futures market. So I hope you guys enjoyed this video. I hope you guys got a lot of value out of it, especially creating a plan to trade with after we've identified a lot of different distribution aspects, and even using the overnight session, a little quick trick there. And if you did enjoy that video, Tell me down below, do you now use the volume profile? Did you before? Will you in the future? And let us know. Also, drop any comments down below, any questions you may have, and smash that like and subscribe button. This is Victoria from TRADEPRO Academy, and I hope to see you in our next video.